Well, welcome. Great to have you here at today's webinar. We are about 4 minutes before we kick things off, and I started the webinar early to make sure that everything is running smoothly on my end and on your end. So if you can see my screen, which looks like there's a bunch of coins stacked up in a row, and like ever higher and higher and higher, with some words on the screen, and you could hear my voice in the chat box. How about you just give me a big yes? Give me a big yes in the chat box. So Amira, Tom, Donald, thank you very much. Terry, loud and clear, says Julio. Thank you. Anthony, awesome. Great to know that I'm coming through loud and clear, and great to have you here on this, here it is, on the evening of January 6th in here in North Carolina, which is where I am, East Coast of the United States. Actually, I'm not on the coast. I'm actually at several hours inland, but it is dark outside. It's almost 6 p.m. So look for your chat box. Now, let me kind of change slides here. Look for your chat box. It should look like this. And if you can't find it, let me get my laser pointer. If you can't find it, look for a little arrow that looks like this. So if you're using the GoToWebinar platform, find that little orange button right there and click on it, and you'll have a spot where you can type to me in the chat box. Let me know where you are. I mean, how about this? Also tell me what time it is by you. So Michael's in Australia, and from what I hear, Australia is a pretty big place. So are you more on like the east side, like a Melbourne, Sydney type area? Kate says also in Australia, 9 a.m. So we got Los Angeles, we've got Nebraska, Toronto, somebody's from the whole country of Canada. Who's that? Bill, welcome Bill. Jim from Indianapolis, 6 p.m. So we got a bunch of people 1 hour earlier than here. So we got 6 p.m.s. Let's see, Sydney, Australia, says Michael. 10 a.m. over by him. Cool. Chicago, and it's dark, says Barbara. 6 p.m. Oh, sorry. I'm looking at my clock. I don't know why I thought it was almost 7 o'clock. It's 5:58 p.m. So a lot of 6 p.m.ers. You are on the same time zone as I am. Atlanta, Georgia, says Rohan. Welcome to all of you. Now, we got 2 minutes before we officially start. I do want to learn a little bit more about you. Okay? So let's use this chat box just a little bit more. In the chat, please share what's the hardest part about investing in the stock market for you. What's the hardest part? That'll help me tailor the webinar, kind of know. I want to make sure we're all in the right spot too. So I'm seeing Terrence and Terry both say when to sell. Timing, says Pietro. When to buy, says Alan. Time to get back in, says Tom. Controlling emotions, says Dennis. Selling, Susan. Volatility, trusting the signals. When to sell, where the market is going next. When to spot if the market's going to crash. What and when. When to sell, says William. Finding the right stock, says Johan. All right, so I'm seeing a lot of selling and when to sell. And also wondering what the market's about to do. So that's like a timing thing, like when to buy, when to sell. And people are saying finding the right stocks, what to buy, says Michael. Picking the shares which are in an uptrend, says Ramki. All right, yeah, so it seems like we are all in the right spot because the main gist is the when to buy, what to buy, when to sell. And that's perfect because today we are going to be covering all those items in today's webinar. So you are in the right spot to learn what you're looking for. So let me look at my clock. It says 6 o'clock on the East Coast. So that's what time I promised we would start today's webinar. So let's officially start. Welcome. Welcome to today's webinar. It is titled The Successful Investor, How to Buy and Sell Stocks to Consistently Make 15% a Year. My name is Brian D'Amico. I'm excited to be here. All right, and I'm joined by my fellow coaches in the background. You don't hear their voices, but you'll see them typing to you in the chat. We've got Todd Schaefer and John Marabu, and they will help in the chat. We are all here to help you become a more successful investor on basically showing you how to buy and sell stocks the right way. We're not going to get into all these fancy techniques and make you feel like you got to be some sort of super duper technical trader to be successful. No, we're going to show you how you could just buy and sell stocks in a prudent manner and still be successful. Now, our target is 15% per year on average There's going to be some years that are better, some years that are worse. There could be a year like 2008 where the market collapses, right? Well, then in that case, we want to outperform the market, okay? And basically not lose 40% in the market. But on average, what we're talking about here, and VectorVest has been in business for decades. The technique that we're showing you is the same one that our founder, Dr. Bart DeLito, created the whole company with. And his target is 15% a year. That's what we're doing with this technique. And you're going to see that it's not just based on back testing, which I'll talk about later. It's not based on that. It's based on real results. You'll see a lot of examples from our clients, right? And they've been following these techniques and getting those results. So that makes us very confident to say you are in the right spot to get these results. Okay? So one thing I want to talk about before we officially get into the content is the thing that makes this so important is that until you know how to take control for yourself and make money in the market, you're going to be at the mercy of outside forces. But you don't want the government basically like the Fed who sets interest rates. You don't want those things to tell you how much money you make and when you can get it. You want to be the one who's in control of your own finances and how much money you make. So that's why it's important for you to learn how to do this. Okay, you want to be the one in control. And my promise to you in today's webinar is that you'll see how you can safely and steadily grow your portfolio every year without taking unnecessary risk. All right, without taking unnecessary risk. Okay, and you'll get confidence that you know when to buy and sell. Okay, the main thing is that your system determines your success, and that's why as we go through today's webinar, we are going to be talking about a system of when to buy, what to buy, and when to sell. Okay, so if you feel you're pretty good right now at investing, that's fantastic. I know that what you'll learn in today's webinar can make you even better. Now, if you're unsuccessful right now or you're struggling, well, what you're going to learn today can turn that around for you and get you on the path to become successful. All right. To put a picture to a name, that's me. My name is Brian D'Amico. I'm one of the investing coaches here at VectorVest. I've been here for over 19 years. All right. VectorVest has been in business for decades. Dr. Bart DeLito started I think 1988 was when it officially incorporated. But he actually started the company back in, I believe it was the early 80s, maybe even late 70s, but way back then. We've been around for a long time, and you can see I'm just a member of a large team of people here at VectorVest to help you be a successful investor. Okay? Now, when people first come to us, like before they even take any of our education like you're doing today, they share with us what their investing life has been like. And people say, you know what? I need help because I feel like my account's going nowhere. Right? I'm struggling. I'm kind of just spinning my wheels. And if you see any of these things that fits you and kind of where you are right now, let me know in the chat. Like Eric is like, the struggle is real, right? It feels that. They say, people when they come to us, they say they feel like they might not have enough money when they retire. They might have to scale things back, right? Change their lifestyle. And they don't really want to do that. Right? But they say what they really want is to be able to consistently grow their account. They're not looking for 300% per year. They just want to steadily grow their account, right? So that way they're confident and that they're able to be self-sufficient and able to provide for themselves and for their family. And I want to be able to give that to you today. All right. So in today's webinar, these are the things that we're going to cover. Number one, we're going to cover the exact criteria you need to know to pick the right stocks. We're going to look at 3 keys to buy those stocks at the right time and when to sell your stocks. I'll give you some nice tips. The 2 main things that we use in our portfolio that you should be using as well. All right? Like I said, this webinar is built on results. It's not just hypothetical backtest things that may work, that we kind of think might work. No, it's built on results that we've seen here at VectorVest, but also on the results of the people who have taken this training and doing it in their portfolio. A few of the people that we're going to talk about today who have shared their results with us are people like Ross. Ross, he wrote to me and he said, prior to learning the system, his trading was haphazard and time consuming. All right, and his results were below average. Okay, and In the 6 months after learning the system, he made 33%. Okay? And he's able to do that with very little trading. And I'm going to show you how to do that today. All right? And in addition to Ross, we've got Tim. We'll talk about what Tim's doing here. Prior to learning the system, Tim would buy what he thought were good stocks, but he never knew when to sell them. All right? He said he was like trading in the dark. All right? But 6 months after learning the system, which we're going to look at today, he said he was on pace to make 30% as well. So again, they're outpacing the 15%, which is totally possible. You can have years where you really knock it out of the park. All right? Kamel, one of our best students, right? He when he first started, he said he was stupid and undisciplined with his investing. But after implementing things, and he's been doing this for a couple of years now, his portfolio, and I'll show you multiple of his portfolios, multiple portfolios of his, however you say it. And one of them during that year was up 22%, which was outpacing the market that year. All right. And then Carol, I love this comment from Carol. Carol said she was able to fire her money manager and do it herself and do 8 times better than the money manager ever did. Okay. And now is a great time to turn off all of distractions. In fact, let me just grab my phone here and I'm going to turn this off. So that way, let's see. There we go. That way we do not get any distractions on my end. If you have a door, shut your door. If you have a whatever might distract you, if you have your email open, close your email. But just dedicate this next hour to your investing. Okay? Quick note about today's webinar. It is very interactive. Like I said, I'm here. My teammates are here to answer your questions. I will ask you several questions throughout the webinar. And it means a lot. The webinar will mean a lot more to you if we interact back and forth. Okay? So I'm going to give you everything I can during the hour or so that we've got together today. Okay? There's obviously only so much we can cover in an hour. I wish we had more time. But there's only so much we can cover. At the end of the webinar, if you want to get more information and you want to get more help, then I will show you where you can go to get more help. I'll try to point you in the right direction. All right, so if you're good with that, in the chat box, let me know you are ready with a big yes in the chat box, and then we will get going. Oh, I love that. I see a yes with a lot of exclamation points. I see Susan, Pietro, perfect. Thank you for the yeses. So let's talk about how to pick the right stocks. All right, so I figured we would start the webinar with the what to buy portion. Okay, remember, we're going to look at 3 portions, the when to buy, what to buy, and when to sell. I figured we would start with the what to buy. All right, because there's a right way and a wrong way to choose stocks to buy. Okay, so let's talk about how to pick the right stocks. All right, so here's an example of a stock you might think is good to buy, but after you buy it, it either goes nowhere, or kind of stalls, or it goes down. And that's very frustrating when you buy a stock that you think is good and then it falls. And you're left wondering, what on earth just happened? So let's talk about the problems that might be causing this to happen. So we're going to talk about the problems first, and then we'll talk about the solutions. So problem number 1 is you're just buying stocks that are already going down. Okay, so what you're looking at here, this is the same stock as the one I showed on the previous slide. This is just zoomed out a little bit so you get the bigger picture of what's going on. Now, most investors have been trained to buy stocks that look like this. Because you might hear about it on TV, or you've had an advisor tell you to do it. They say, "Oh, let's buy it now, and let's ride this thing back up." Let me just say this: stocks that are going down typically continue to fall. Like a body in motion tends to stay in motion. So problem number 1 is that you're buying stocks that were already going down. So it's no surprise that they continue to fall. Problem number 2 is you're focused just on the dividend. Like you buy a stock just because it pays a good dividend or a dividend. Now, my co-coach, Todd, who I mentioned earlier, the two of us do coaching every week. And we hear this very often. Right? We hear this very often in our coaching sessions. They'll say, "Oh, should I hold on to this stock? I know it's falling, but it pays such a good dividend." Well, I want you to understand that getting dividends is nice, but I want you to think of it as just a nice little added bonus to get with this successful investor technique that we're talking about today. All right? If you focus just on the dividend, right? If you're buying just because the stock pays a nice dividend and you're not looking at anything else, you could really be setting yourself up for failure. Because what happens a lot of times is people who do that, they're letting a stock fall like 10, 20, 30, 40% sometimes. And that's reality. We've talked to people who have done that. They let stocks fall 40% because it pays a 3% dividend yield. Okay? This one here that you're looking at, this example, actually had an 11% yield. All right? At that time, right here, when that person was thinking about buying that stock, it had an 11% yield. But this stock dropped 62% over the next few months. And if you're making that kind of a trade-off, you're never going to be able to consistently grow your account. And you're not going to be able to outperform the market. Yeah, Michael says, I've been there. Exactly. So we can't make that trade-off. Now, problem number 3 that's causing stocks to fall is you're buying stocks just because of the company name. Now, a lot of times when you get into investing, you don't know everything, right? So a lot of people, what they do is they buy big companies that they hear about on TV or that they shop, places they shop like Walmart, McDonald's, Disney, whatever. So here you're looking at Windstream, and it serves 2 purposes. It's such a great example because it's a real example that one of our clients came to us with. And I know the company went bankrupt, but it serves as a great example. But it's an example of a company that it was my internet and phone provider when I moved into my house. And that's what people might do is these companies where they shop and they do business, they buy shares of those companies because they think they might be good investments. Right? So you say, oh, that's a pretty big company, I'll invest. But just because a company is well known doesn't mean it's the right stock for you to own. So those are 3 big problems, but that's not the underlying problem. The real problem is that you don't have any buying criteria to look at. You need buying criteria. That way you can check things off saying yes, yes, yes. And you know for certain that that is the right thing to buy. When you have no buying criteria, you're left saying, what should I even be looking at? And when you say that, the market has a way of giving you a ton to look at, right? People would say, I just feel overwhelmed with all this data, right? If you don't know what to look at, the market will give you a lot to look at. And if you don't have buying criteria, you'll always be left saying this to yourself. Did I actually pick the right stock? Did I pick the right one? And even worse, you might pick a bad stock and think you picked a good one. And I have a picture of pineapples here because that's the situation I was in. My wife asked me to go get a pineapple. I went over and got a pineapple, and I thought I picked a good one. It looked good. But she said, no, yeah, you can tell they're fresh because you got to sniff the bottom, and I guess I got the wrong one. But I would have left that store thinking I did everything right, and I picked a good one. And there's nothing really you could have said to change my mind. So the same thing happens with your stocks. You could buy a good stock, you could buy a stock thinking it was good, but it really wasn't. And then if you do that, you end up holding on to a trade. Even if it starts to go against you, you start to say, you know what, I'll give it some more time. I didn't do anything wrong. I can't be wrong. I picked a good stock. It'll come back. All right, so you need to have and use the right buying criteria. All right, so let's look at the 3 criteria to use to pick your stocks. Okay, let's look at 3 things. We're going to draw it out first, and then we're going to look at some examples. All right, so first off, there's an earnings criteria, there's a safety criteria, and a trend criteria. So when it comes to earnings, there's 2 things for earnings. You want to make sure earnings are rising. That's going to be the engine that drives stock prices higher over time. Okay, it's an important part of this technique is to look for companies that have rising earnings. Not only rising, but we want to ideally look for rising in positive. Okay, so those 2 things put together, and we'll look at examples in just a second. Safety, we want to start to look at a 1-year chart, but then drag that out to like 3 and 5 years, and even go 10 years to feel even more confident. And when we're looking at safety, we're going to start to look at volatility. We're going to start to look at what the company did with their earnings over multi-years. So we're going to start to look 1, 3, 5 years to get a feel for the safety of that company. And another way we're going to look at safety is whether it is over or undervalued, and we're going to favor undervalued. right? Because over time, stocks tend to go to meet their value. All right. Now, when it comes to trend, there's three things. We want a smooth and steady stock trend, that trend to be going up, and the way that we know it's going up is that it's hitting higher highs. So when we look at examples, we'll see things like this, where it'll be smooth and steady going higher. We don't want it just to be smooth and steady going sideways. We want it to be hitting higher highs, higher lows, and we'll look at that in an example. All right, so visually it'll look like something like this. Now, when I show you these charts, we're going to look at a 5-year charts, but keep in mind, we typically would start with a 1-year chart and then expand it out to like 5. All right, to save a little bit of time, I'm just showing you a 5-year chart right out of the gate. All right, so here with a 5-year chart, we're going to try and get bottom left to upper right as smooth and steady as possible. What you want to avoid would be things that go bottom left to upper right and have wild swings, right? That might be more for an aggressive investor who's trying to get in here and get out here. All right, we're not swing trading or day trading here. Okay, so what we want to do is have smooth and steady as possible. That gives you that sleep at night factor to let you know that you can go to bed at night and not fear what's going to happen the next day. The other thing to look at here is if we break this 5-year chart into smaller chunks, each year it's higher year over year. That gives you more confidence that if you buy it, over the next year it'll have the probability of it being higher over time is higher. Okay? Now, later on in today's webinar, we're going to talk about when you should be buying them, all right, your entry point. But right now, we're just talking about the quality and the types of stocks that you should be considering. So your stocks should have steadily rising prices and rising earnings. So this is what it would look like. Nice rising pattern for earnings. Now, I happen to use a graph from VectorVest. That's a company I work for, which I mentioned earlier. I love it because I just have to look at one number. It's very simple, earnings per share. We have a proprietary formula for earnings. It's a 12-month forecast, and we just have to look for this blue line to be going higher. Now, if you don't use VectorVest, and I think some of you on today's webinar don't use VectorVest, you can either start to use VectorVest, that's an option you've got, of course, or you'll have to do a little bit more digging. You can find earnings data out there, quarterly earnings forecasts, and so ideally you'd want to have companies that are growing their earnings year over year. All right, it's a little bit harder if you don't have a tool like this, but you could still find out earnings data. I just love this because this takes me 2 seconds. Right? It just looks for that to be going higher. This is the engine, right? The engine that drives stock prices higher over time. Right? Without earnings, companies can't grow. So we want earnings to be going higher. Okay. Now, do you remember that company Windstream that we were looking at earlier? I use it because it was an actual real example from one of our coaching clients. When he first came to us, before he actually went through all the training that similar to what you're getting right now, before he went through all the training, he came to one of our webinars and he said, "Hey, what do you think about Windstream? I just bought it a couple days ago." So Todd and I, we were on the webinar with him, and we said, all right, well, let's take a look at this thing. Let's go through the buying criteria. And remember, this is something that Steve, who's the one who asked the question, this is something that Steve should have done, and he would do going forward, but this is what he would have done prior to buying Windstream. So on the day that he bought it, which was here, he would have noticed that price was falling, earnings was falling, and price was over its value. It was like 3 strikes, right? Strike, strike, strike. He would never have bought it. That's the whole thing. We're trying to prevent you from buying bad stocks. Stop buying the bad stocks. That way you don't have to sit there and manage these bad stocks all the time, which can be very frustrating. All right, now, once we showed this to Steve, the decision at that point was up to him, but he said, hey, I'm selling it now. It was a good thing he did because it dropped like 10% in the next couple of weeks, 60% in the next few months. I checked it like a year or two later. The company actually went bankrupt, and here you see it was trading at 20 cents about a year ago or so. All right? Imagine if he didn't sell it. He would have been convinced that maybe he made a pretty good decision. He was just going to give it one more day, give it one more day, give it one more day, and on each one of these little upswings, you get so hopeful, and then poof, and then you're like, oh, well, now I might as well hold on to it now. And then you're just sitting there for years holding this stock, and it's a constant eyesore in your portfolio, and it brings you down every single day that you look at it. So let's take some preventative measures here, okay? Yeah, I just see in the chat box that Ray just typed in. He's like, I did the exact same thing with Enron. I remember that. That was right when I first started here at VectorVest, right in that same time period. So this is real. So we want to prevent buying stocks that look like this. We want to do this instead. Here's eHealth, EHTH. This is a stock that we had in our portfolio. When you follow the checklist, you could do things like this. And it doesn't really even matter the ticker symbol. I can cross out the ticker symbol. You're going to see the stocks I'm going to show you here have the same pattern. Rising price, rising earnings. That's what you're looking for. You're going to find a ton of stocks, right? They're not unicorns, right? They're not like this mythical creature that you'll never be able to find. You're going to be able to find several of these candidates, and then you just have to pick among them which one you like the best. All right, so here's one that we selected in about a month and a half. It was almost 26%. All right, so when you use the right entry and exit rules, which we'll talk about today, you'll be able to do things like that. You'll find things like Enphase. Now, Enphase has been, if you pull it up today, it's still one of these, a great company. It's still one of our top stocks. The reason why we bought it is right after the market dropped, the COVID collapse. This is a technique we teach in our full course called prudent bottom fishing. This stock that was beaten down started to go back up. It was a good stock with rising earnings. So we got back in 19% in a couple of weeks. All right. And then you'll still find, the good old stocks like Lowe's, right? All right. You'll find stocks like Lowe's, smooth and steady as she comes, right? This one was just a few months, a 23% gain. All right. The point is that there's tons of stocks out there, not just stocks that you know about like Lowe's. There are stocks that you might never have heard of, and they're going to fill the same buying criteria. It's important to have that buying criteria. Okay? All right, that's how you're going to be able to consistently grow your account. So let's take a look at and do this together. I'm going to show you a few charts, and I just want you to give me in the chat box a yes or a no. All right? And you give, how about yes, no, or maybe? And you could draw out on a piece of paper, yes, no, maybe on a piece of paper. Okay, so like a yes column, a no column, and a maybe. But in the chat box, let me know what you think. All right, so here's example number one. Remember, this is a 5-year chart, and I took off the ticker symbols and everything else just so you can get in the habit of just looking at patterns. Yeah, I thought I'd start with an easy one. Everyone is typing in no. Yeah, this is a long downtrend. Earnings is falling. All right, that should be a no-brainer. If you see something like that, you just move on to the next one. How about number two? So remember, this is 5 years, so probably from here to here is like 2.5, 3 years. This is a half a year. This is probably 2 years. Yeah, most of these are no's. I see a couple of maybes mixed in there. Yeah, probably the maybe is because you see earnings like this, right? Well, just because earnings is going up, sometimes stocks fall out of favor. This is an extended downturn, and it's still falling. So that's a no. How about this one? You see the difference? My chat box just filled up with yeses. Yeah, this is a no-brainer, right? Rising price. This right here, you have to give it a pass. And if I showed you the dates down here, you would have known that that was a time period where all stocks fell. So when you see that, you give stocks a pass, and then it just resumed right back up when the market started going higher. Rising earnings. Yeah, this is a no-brainer. How about number four? Yeah, this is everybody. Tons of people are saying no, and I see probably about 15 to 20% of you are saying maybe. Looked good here, right? Rising earnings, but earnings is beginning to fall. And remember, this is probably 6 months worth, and this, it did not recover, right? It started to recover, pulled back, and it has not yet put in another higher high. So we would want, and we'll talk about this later in the webinar, we would want earnings to start to turn around. We would definitely want price to start to break up above. So even if you gave this a maybe, you'll notice that there are other stocks that you'll find that look like this. You might think this is the same stock I showed you back in, what was it, example 3? If you see a stock like this and then you were looking at this, you'd be like, no way, I'm going to go with this, right? Look at this, 5 years, all right? So stop choosing the maybes. And that's the thing. If you have any stock that you feel maybe about, turn it to a no. All right. So would you be more or less confident in your stock picking if you had buying criteria like that? If you used a system, right? If you used a system like the one we were just talking about, simple criteria, smooth and steady, rising, all that criteria that we just looked at, would you feel more confident in the stocks you're picking? Yeah. Ramki says more definitely. Yeah. Janine says, yes, I would. Yeah. A big part of being a successful investor is your confidence. And your confidence comes from using a system that you believe in because you know it works. Now, Ross, do you remember him? I talked about him earlier. Ross, when he first came to us, he actually sent me an email after he took the training and had good results. He sent me an email telling me about his journey from not doing well to where he turned things around. And he said he actually was an experienced investor with many years of trading under his belt, but he had no system, right? No system, right? And he spent a lot of money on newsletters. Have you been in that position where you just seem to be throwing money out at newsletters? Well, he was in that same spot, and his trading was haphazard, time consuming, right? The other thing was he was prone to over trading. Basically what he said was he didn't commit to any strategy. He was trying this, and then he tried that, and he tried this, and he was just trying a bunch of different strategies, ending up to a very time-consuming process and over trading. But he was determined to turn things around. That's when he started to take the training that you're doing here. He actually took a more expanded course as well. After he did all that, right? After he took this training, and we have a full course, like a 6-week course called The Successful Investor. He went through that, and he said he committed to doing it. He committed to one strategy instead of doing a whole bunch of different things. He was able to build a diversified portfolio of really good stocks, right? He focused on safety and earnings like we just talked about here. He was able to get 33% in the 6 months after he learned it. Right? He's now only spending 15 to 30 minutes a night on his investments, and he's confident and more relaxed. And he said he's actually having more fun, and it's less complicated. All right? So one of my jobs today is to help you make certain shifts. All right? So hopefully after we went through this first section, you're saying, you know what, I don't want to be uncertain about the stocks I'm picking anymore. I want to start to use buying criteria, which is going to help me find stocks that have a high probability of going up. All right, so I want you to make that shift now. In your brain, say, I'm going to shift to picking high probability stocks using buying criteria. All right, the way you pick your stocks, the way you find your stocks and pick them is one part of your system, and it's needed to help you average that 15% per year or higher. Okay. Number two, now that you know what stocks you want to buy, you've got to know how to buy them at the right time. Okay? Because most investors out there, you might be one of them, who have been taught the philosophy of, hey, it's okay to buy any day, any time, because everything goes up. But that turns into a buy and hope strategy. All right? What's been so tough recently for a lot of people is markets that look like this. This is the past year in the market. The market went up, then it crashed. Then it shot up, then it pulled back, then it went up, then pulled back, heading into the election. I mean, it's just up and down and up and down. Just when you get in, the market seems to reverse, right? It ends up, you feel like you're living through some sort of roller coaster with your portfolio, and the roller coaster is slow on the way up, click, 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 and then fast on the way down. And it's just very gut-wrenching to live through that. The other thing is you feel like you're second-guessing yourself. If you don't know when to buy, you're like, well, should I buy today? Well, CNBC said it was okay to buy. Well, I'll buy. Well, maybe I shouldn't. I'll wait. And so you're playing that game with yourself, and you're second-guessing every decision you make. So let's talk about the problem that's causing stocks that you buy to fall. Okay? And that's the big thing, is why are my stocks falling? Number one is you maybe just picked a bad stock. And we talked about this in the first section, so I'm not going to really kill it here. But just know, problem number one is maybe you're buying bad stocks that are in downtrends with poor earnings. And that's one reason why the stock you buy goes down after you buy it. It's just you picked a bad stock. Problem number two is maybe you got bad advice. Now, keep in mind, I'm not beating on advisors here. I bet they have your best intentions. Like, they want you to be successful. No, I doubt there's an advisor out there who wants their client to lose money, even though I have a picture of some guy on the screen here who looks like he got evil intentions. What I'm trying to get across here is most advisors are giving advice based on a bad philosophy, the same old philosophy that they were taught, which is buy stocks anytime. Everything goes up. All right, so wherever you get your advice, most people teach it that way. All right, so that's problem number two, is that you're just buying any old time, taking bad advice. And problem number three is you feel like you're cursed with bad luck. All right, there's no such thing as bad luck, but I'm telling you, if you feel that you're cursed with bad luck, you make bad things happen to yourself. All right, you buy a stock, and then if the next day it goes down, you're like, oh man, I'm going to sell it. And then after you sell it, it goes back up. And you're thinking, oh, what bad luck. Well, it wasn't bad luck. You didn't follow a system. All right? So those are three problems. But the real problem, guess what? Is that it's just you bought at a bad time. You know the saying, timing is everything? Timing is the most important part. There is a right time. There is a bad time. All right? You want to have clear entry signals into the market. All right? When you do it right and you have a system with certain rules, you're going to, on a day-by-day basis, you'll be able to say, all right, well, today is Wednesday. Yep, signal says it's okay to buy. Today is Friday. Nope, there's not a good time to buy. All right, so let's look at those keys to buy things at the right time. The first one is this. The market. This is the biggest one. Put a star next to it. This is the biggest thing you need to look at. It's got to be the market. The market has to be in an uptrend. Okay? You know, the saying, a rising tide lifts all boats. So if the stock market as a whole is in an uptrend, it has a tendency to pull everything up with it, even the bad stocks. So even if you are not the best stock picker in the world, if you at least do that when the market's going up, the market will have a tendency to pull up your stocks with it. So you got to be buying when the market's going up. When the market's going down, don't buy at all. If you buy when the market's going down, bad things could happen. I leave this example in here because this is kind of the almost worst case scenario, is during a big drop in the market like in 2008, or even during the COVID collapse, which we had last year, right? Where you might retire, like Robert here. He retired. He had a professional advisor helping him. And throughout 2008, they kept riding it out. So they said, hey, let's ride this out. So they held on to stocks. They continued to buy and sell as the market fell. And Robert said he watched his portfolio, his retirement portfolio, lost 40%. All right. A lot of people, when that happens, they leave. They never continue on in the market. Right? They don't try to recover it. Okay. They ditch it. So we don't want that to happen to you. All right. Here's a look at, a 20-year look at the market. And it doesn't have to be a market collapse like this in 2008. It doesn't have to be a COVID crisis like we had last year. There are other time periods when the market is falling. During those times, you don't want to be buying. What we focus on here at VectorVest is trying to get across the idea that you should only buy when the market is going up. Right? There's big trends like this, the big ones. But inside these big ones, you're going to be buying here, not buying. Buying, not buying. All right, so that's a 20-year look. Let's look at the past year. So this is the past year where the market went up, the market came down. The market went up, came down, up and down, right? So you need a signal that tells you when it's okay to buy. The simplest one that we have here at VectorVest involves green lights. We call it our green light buying technique. It's a daily signal that says, all right, market, it's okay to buy today. All right, so take a look at what you got here. You got green arrows. What do you notice? Green arrows during an uptrend. No green arrows over here when the market was going down. No green arrows when the market was going down. Green arrows during the uptrend. During this pullback here, what do you got? One snuck in there. During this pullback here, what do we got? Like one snuck in there. For the most part, you're only buying when the market's going up, right? That is going to help save your bacon. By just buying when the market's going higher, when the market's falling, you just manage your positions. And eventually, if it's a big enough drop like this, you will eventually be in cash. Like in this one, most of our clients were in cash in this area and didn't have to experience the rest of that drop. Okay? Number 2, your stock has to be in an uptrend. So not just the market, but your individual stock. Now we talked about this a little bit earlier. You want to make sure the stock is already doing what you want before you buy it. Remember Windstream, right? You know, it's going up a little bit right here, but all right, I'm showing it to you again because it's a great example of a mistake that people make. Okay, it's a great example of a mistake people make. This stock was clearly in a downtrend. How do you know? This, lower highs, lower lows. Okay, when it's doing, that is the definition of a downtrend. And actually, when we talked to Steve, you know, Steve, we pointed out, hey, this thing is actually, when you bought it, it was touching that downtrend line. Right? It is still in downtrend. So you don't want to buy a stock when it's in downtrend because it typically continues to fall. You've got to have evidence that that downtrend is over. You know, here's an example of stocks that are not in downtrend. Higher high, higher low. Why is that important to look at? Because if you buy a stock that is hitting a series of higher highs and higher lows, when it stops doing that, you become defensive. Look at this. Lower high, lower low. You're defensive now. Right? You are now defensive. If you don't own that stock and you see that this, you know, you got a good stock that is now hitting lower highs and lower lows, you don't buy it until it starts to hit you higher high. That's an initial sign. Higher high, higher low. That's good. You can buy it when it starts to break out and go through all that, right? All right. Number 3, you want your stock to be clear of resistance. All right. Now, you're not going to see this on every one of your trades, but as you start looking for it, it'll become more and more obvious. You want your stocks to be clear of resistance, right? Kind of like this. You have a resistance is like a ceiling. And a lot of times stocks go up and hit it, and pull back. That's just like if you bumped your head on the ceiling. But you want a stock to be not just touching resistance, but breaking through, just like in this example. All right? If it's not busting up through resistance, a lot of times it'll hit it and fall back down, just like if you hit your head. All right? So here's an example with CNC. CNC, you know, it was a good stock. You know, good stock, rising in price. Everything was looking good. But it stalled right here. All right, well, that's weird. You know, you got a good stock that stalled and pulled back. All right, it had a bit of a sell-off, and then it started to rebound. All right, started to rebound, pulled back. Started to rebound again. It's right back up here. You know what's happening up there? All the people who didn't sell it back here, I won't say all of them, but a bunch of them have sell orders in, saying if it ever gets back up to that point again, I'm going to sell it, which is why you see all these times it stalled, and then it gets back up there again. A lot of times, it can't overcome the selling pressure, and stocks fall. All right? What you want instead is stocks to be breaking up through resistance. Kind of like right here. You have a good stock that fell out of favor. All right? Started to rebound, came back up, right at resistance again, right here. It's straddling resistance. The most prudent thing to do is to wait for a full candle above, like that. If you're more aggressive, it would be here, more prudent over here. What tends to happen when it overcomes all that selling pressure? Typically clear sailing. All right? So those are 3 keys to buy at the right time. All right? I want to ask you this. What percentage of the time have you made sure to look for all 3? You don't have to be exact. In the chat box, share with me. What percentage of the time have you been looking for all 3? Like 0.5%, says Phil. 2/3 of the time, 50%. 0%, none, none, 5%, none, never, never, none, 50%. All right. I'll just say this. If it's anything less than if it's anything less than 100, you got some work to do. All right. It's pretty simple. You should be able to look for all three of those things on 100% of your trades. And if you have a checklist, right, we provide our customers, when they go through the full training, we give them a checklist. They print out the checklist and they make sure all the rules are met. Just check, check, check on every trade that they do. All right, so you got to get it up to 100%. Do you remember Kamel from earlier? Kamel said before he fixed things, he used to have no discipline at all. This is what he did. Check this out. He said he would buy falling stocks in down markets on down days. That's like the trifecta of badness, right? Is that a word? Anyway, that was just everything wrong he could do, he did. And then after he bought those things, he would just sit there hoping they would come back. And he eventually started to question his ability to invest. All right? Have you ever been there where you kind of look yourself in the mirror, or maybe you can't even look yourself in the mirror. You just kind of put your head in your hands, maybe at your computer, and you're like, should I even be doing this? Like, maybe I should just, give it to some other person to do this for me. Well, you don't have to do that. You can do this. Kamel is just another example of somebody who was able to turn things around. He wrote to me and he said he was able to increase his confidence level. In fact, Kamel, he would attend our weekly coaching and he'd send me updates. I loved it. He would take pictures of his portfolio. He would take pictures of his computer and email them to me. Here's an example. I zoomed in a little bit. This is one of his portfolios during that, I believe this is in 2019, the year of 2019. He was up over 22% in that portfolio. And I just love the steady climb in that portfolio. Now, he had another portfolio, which is more of his retirement portfolio. I was up 43, almost 44% since he started that portfolio. All right. He even sent me a summary of the trades. All right. Here's a summary of the trades. And you can see, let me get my laser pointer over here. He only did 21 trades. He was only 50-50, 11 winners, 10 losers. So you don't have to win all the time to be successful. You can be a 50-50 trader when you have a good system. All right. The other cool thing Kamel said is that his emotions are minimal and he has no stupid actions anymore. And he now finds his portfolio management less stressful and more rewarding. And all of this is due to using the systems we've been talking about today. Okay? So remember, you're making certain shifts. Shift from the portfolio roller coaster where you have no clear entry signals to where you're buying at the right time. Right? So you need a system like the successful investor system that we're talking about here to start buying at the right time so you can start to see that steady climb in your portfolio. Right? That's the only way you're going to be able to average 15% per year or more is by having a good entry signal into the market and your stock. All right, so let's talk about when to sell. You ready for that? All right, so when to sell. So if you're kind of looking off into no man's land, kind of straighten your back, shift around, get the blood flowing, because we're going to be talking about some great rules that you need to be following on when to sell your positions. All right, because now that you know the stocks that you want to buy and when to buy them, the most important thing is when you're going to sell them. All right, that's when the money's made, right? When to sell. This is the thing that most investors have the most trouble with. Okay? You'll see a stock that looks like this. You're like, oh, Brian said to wait for it to break above resistance. Here's resistance, and Brian said to wait. All right, boom. Full candle above resistance. Beautiful. I'm going to buy it. And look at this. It continued to go higher, and you're feeling really good about the trade. You have a winner. But then if you don't know when to sell, you watch a winner turn to a loser. Right? And sometimes when you hold on to that loser, it turns into a big loser. And the downside is, and some of you shared this with me earlier in today's webinar, you get to a point where you say, I might as well hold on to it now. All right? And then it's so hard to recover those losses. Right? If you lose 50% on a trade, what do you have to gain? 100% to make back those losses? I mean, that's tough. It's so hard to recover those losses. Plus, if you're staring at these trades, when you open up your trading account, if you look at a trade and it's down 60, 70, 80%, every time you stare at it, it's a reminder that you did something poorly and you feel like a failure. So instead of that, we want to fix that. The way to fix it is you need to know your exits. Right? You need to know your exits right from the beginning. Just like when you get on a plane, they tell you how to get off of that plane before the plane even moves. Right? So in the full course that we teach called The Successful Investor, in that full course, we actually spend about an hour or so just on when to sell. Right? We have several rules built in on selling. In today's webinar, in the time that we've got, let me give you 2 that I think are going to help you immediately. All right. Number 1, you want to make sure you set your line in the sand. And if the stock hits your line in the sand, you get out of that trade. No questions asked. All right. So you got to have a line in the sand. That is the first thing you should do when you leave today's webinar is take a look at every stock that you own and say, if you do not know when you're going to sell it, if it goes against you, you've got to draw that line immediately and say, if this happens, I'm out. All right. Second, follow the never give back half your gains rule. All right. And we're going to take a look at how to do each of these, but these are the 2 things that you got to be looking at. All right. So let's take a look. So here's UVE. All right, UVE, in this trade, it actually looked really good. You're going to have trades that when you enter them, they look great, but they do not work out. Like they turn out to be a losing trade. This was one of them for us. This was a trade that we did as a stock that looked great. Going up in price, popped up, even after a little flat point here. It had a full candle above resistance, had rising earnings. Everything looked great. We said, we're going to enter here. We're going to set our line in the sand here. It's very simple. We use VectorVest, so VectorVest actually calculates a stop price on every stock. So we drew our line in the sand there, and we said, hey, if it hits that, we're out, no matter what. Even though this is a good-looking stock. Well, what happened? After we entered it, after a day of going higher, or a couple days of going higher, it pulled back, and then boom, a big down day. I don't know if that was earnings or whatever, and it tagged our exit. We got out, we lost almost 11%. All right? When you have rules in place, you do this unemotionally. You cut ties, you move on. All right? If you remember, the entry was about here. And after lingering for a while, it pulled back and hit our line in the sand. That's a 10% loss, but a 10% loss is a lot better than a big loss, holding on to that trade and suffering a large loss. All right, having a line in the sand will protect you from suffering large losses. All right, that could kill your portfolio. All right, will there be some trades where you sell them, they go back up? That's fine. Yes, that'll happen. You could always re-enter it. But what you don't want to have happen is have these stocks really go against you. All right, yeah, Mitch says, yeah, for me, I would have gotten out, then it would go back up. Mitch, you can't think like that. You've got to have rules in place and do it unemotionally. Right there, you're thinking you're cursed with bad luck, right? You feel like the gods are against you. It's happened to us all. But you've got to have rules in place, because if you let one of these go against you, it just takes one and it could sabotage your whole year. All right? Live to fight another day. Here's an example of the give back half rule. All right? Here's IIN. All right, this stock, good looking stock, is going up in price. Earnings were rising. We actually traded this one a couple of times. The first time was here. We got in and we got out here. Well, why did we get out? So we entered here on, as you can see, June 5th of that year. And a couple of weeks later, at one point, we were up 34, 35%. But had two big down days. And we said, hey, we're going to lock in half of those gains. So the rule is, once you're up about 10% on a trade, if it starts to give back half of those gains, you exit the trade. So if you're up 10%, you would walk away with at least 5. If you're up 20, you walk away with at least 10. In this case, we were up 30. We walked away with 17. All right. Now, some people, like Mitch, right? Mitch, you'd say, oh, I just sold it and it went back up. That happens. That happened to us. And we're sitting there like, oh, that stinks. We sold it and it went back up. But guess what? We walked away we had a 17% gain. Now, some people would look at that and say, well, you never should have sold it. All right, well, we got back in over here because the market was continuing to go higher. The stock met the buying criteria. And guess what? This stock at one point up here was up another 19%. It pulled back. We walked away with about a 9% gain. All right. Well, some people say, well, you shouldn't sell it. Remember the last time it reversed and went back up after that? Well, guess what? Not this time. This one went from $70 a share all the way down to $20. All right. That's why having rules in place and following them is so important. You know, if you would have let that stock go from 70 down to 20 and still be holding that, it is a killer emotionally and financially. All right. So knowing when to sell allows you to lock in gains and minimize losses. Now, if you remember Tim from earlier, Tim also took the full course. Right? He took this course that you're going through. He also took the full course that we have. And he wrote to me and he said he was on target to do 30% that year. But prior to learning that system, he said he would buy what he thought were good stocks, hold them for as long as he could. He never knew when the stocks were losing momentum, so he didn't know when to sell them. He felt like he was trading in the dark. He held on too long and the stock went down. All right. The stocks never came back. All right. But after he took the training and implemented the techniques you're learning here, after about 6 months, he was on pace to make 30%. He feels he's able to make informed decisions. He sets his stops once a week. He only does it once a week on Sunday night. He keeps his shopping list ready in case a stock does need to get sold. He has a list of stocks ready to go. And he has a better ability to know what is happening, and he can sleep better at night. And that's huge to be able to sleep better at night. All right? So ask yourself, do you know when you will sell your stocks? All right? Do you know when you would sell your stocks? If the answer is no, you've got to learn selling techniques and start with the two that we talked about here today, but learn how to do that. All right? So if you were to look at your portfolio right now, do you know when you will sell your stocks? Okay? Do you have a stop criteria on every single one? All right? Yeah, I see a lot of no's coming in. No, I do not. All right? Those of you who are saying yes, congratulations. All right? But if I am seeing an awful lot of no's, all right? That's the thing. I want to help you make that shift. All right? Make the shift from not knowing when to sell to knowing when to sell. All right? You got to make that shift. Okay, you can choose to place trades without knowing when to sell, which leads to trading in the dark. Maybe be that deer in the headlights. So you're like, oh man, you're frozen. You don't know what to do. Or you can set the trade, right from the beginning. Right from the beginning, you know when you're going to get out of that trade. So you minimize losses and maximize gains. And this is critical. Write this down. To be a successful investor, you must have a system that includes rules detailing when to sell. Okay? That's how you can average the 15% per year. Right? And your system is the thing that determines your success. So here's a checklist. This will help you grade your system. Put together some of the things we talked about here. So give yourself a yes or no on these things, or check mark, yes or no. Does your market signal, or do you have a market signal that reliably tells you when the market's in an uptrend? So give yourself like a yes, a no. Number 2, are you finding safe stocks rising in price with rising earnings? Right? Do you have a way to do that? Do you have a way right now to easily find safe stocks that are rising in price? Here's a key question. How long is it taking you to do that? And you can say, well, you don't even have to say, well, it takes me 6 hours, 3 minutes, and what. Just say, is it taking you too long? Or is it just right? Right? Do you know how you would use stop prices? And the stops that you are using, have they been helping you to protect profits and minimize losses? Right? You might know how to use a stop, but if your stops are not doing their job and you're losing too much and you're not protecting your profits, then that's an X on number 5. All right, those are the 5 things. I want you to grade yourself, and then let me ask you this. What did you learn about your system? All right? Is it complete? Yes or no? Do you have a complete system? Yes or no? Logan says yes. I see nope. I see a no, I see somebody says it sucks. I say no. I see a whole bunch of no's. All right, so if you say no, we get some work to do. Hopefully some of the things you learned today are going to help that. That's the third shift, is to go from no system to system. So now all of you saying no, you need a system. You're kind of like Rick. Rick was another one of our students. At the time he took the successful investor training, he was retired, and he said, you know what, prior to doing this, I used to invest on my own. I would lose each time. I didn't know what to buy, when to buy, or when to sell. I tried mutual funds, ended up right back where I started. He felt like he was in no control. He had no control, and he felt helpless and hopeless. But after taking the training and making that shift that we just talked about to using a system, he's now an investor who's in control and confident. He actually saw his portfolio increase 11.5% in the first month after doing it. He's got confidence now, and he feels like he is in control of his future. All right, so as you've seen, without the right system, right, you might continue to buy only to see the stocks that you buy drop right away. You might feel like you're trading in the dark. You might feel like you're spinning your wheels and going nowhere. Or maybe you're just not growing as fast as you want or need to. All right. Today we outlined the basics of a system that you can use. And when you have the right system working for you, you'll know exactly when's the right time to buy and what stocks you buy and when to sell them, so you feel confident and self-sufficient. All right, so the obvious question you have right now is, what do I do now? All right, what's the best way to install this type of system in my portfolio? Well, I think you have two choices, right? Option number one is you try it on your own, learn by trial and error, and you might be in the same spot this time next year, not getting the results you want financially or emotionally. Or option number two, which obviously is the more preferred option, is you 100% commit to learning the system to become a successful, confident investor this year, and you begin to confidently and consistently grow your account. All right, so if you're ready to do so, I told you at the very beginning, I was going to point you in the right direction if you wanted more help. If you want to choose option number two, the best thing you could do is take the full course that I've been telling you about today. It's called The Successful Investor. Right, it's 6 weeks to steady growth. Right, it's designed to take you step by step through the system you need to safely and steadily grow your portfolio each year. And the outcome that you get from the course is a complete A to Z system, which shows you how to grow your account and consistently average 15% per year or more. All right, but I do want to say this. Right, hold on one second. This course is only for dedicated people who take their investing seriously and are willing to put time in to learn the system. If you're not serious about it, if you're not committed to it, and if you're looking for some magic pill to become a millionaire tomorrow, it's not for you. We actually wouldn't want you in the course. We want people who are serious about this. All right? Because by learning this system, you're going to be able to have more money, more time, and more freedom. So the easiest way to explain this is, let me just map it out for you. I'm going to tell you what all the modules are so you have a better idea of what this course will do for you, how we do it. I already told you what the outcome of the course is, but in module 1, that's where we're going to focus on the strategic game plan. Right? It's important we start with that because we got to begin with the end in mind. We need to make sure to align your investing style with the overall targets. The outcome for module 1 is you're going to have clear goals and objectives. You're going to know what type of investor you've been and how to course correct and get to where you need to be. All right. Module number 2 is all about getting into the market at the right time. All right? It's important because the market can be frustrating if you don't know what to look at. The outcome here is you're going to be able to understand and recognize what the market is doing at any point in time. All right. You're always going to know whether it is safe to get in, when it's not safe. All right, we're not just going to be talking about green lights. We're going to say, all right, these are all the different phases of the market. These are the more opportune times. These are ones that are a little more risk. You're going to know exactly what's going on. Module 3 is about what to buy. Right? In Module 3, it's identifying the right stocks to buy. It's important because a lot of people waste hours and hours and hours digging through data trying to find their trades. And then when they're done, they still wonder if they made the right decision. The outcome here is you're going to know exactly how to quickly find and identify the stocks for your portfolio. Module number 4 is all about when to sell, right? I told you today I could only talk about 2 of the multiple criteria that we teach in the course. All right, knowing when to sell is important because selling too early or too late can be utterly devastating, right? And really just bring you down emotionally too. The outcome from module 4 is you're going to know exactly when to sell a stock to minimize losses. Right? You're going to know what to do if it goes for you. You're going to know what to do if it goes against you. It's all rules-based. It's no guesswork. Okay? Module 5 is all about setting up the trades. You're going to know how to position size. You're going to know how to manage risk. You're going to have a daily checklist of all the things you should do. In fact, in the daily checklist, that's given to you in Module 6 because that's all about implementation. We're going to show you how to follow a daily routine. Right? And the outcome you get from this module is complete confidence and peace of mind because you know exactly what to do every single day to implement the system. All right, by the time we're done, you're going to have that complete system we talked about today. So in addition, we put together a bunch of bonuses, but before I tell you about the bonuses, I haven't even told you the price of the course, but whatever price it is, it's a 100% money back guarantee. All right, we believe beyond a shadow of a doubt that this course will help you get results, so we offer a 100% money back guarantee. So the risk is all ours. You have no risk in taking this course. All right, bonus number 1. We give you 2 bonus modules. One of them, people in the chat box were asking, all right, what do I do in a down market? Well, we're going to have a bonus module which teaches you how to protect and how to profit in down markets. You're going to know exact signs on when to become defensive. All right, you're going to know how to insure your portfolio against large losses. You're going to know how to profit in down markets. Bonus module number 2 is how to automate things. If you remember Kamel from earlier, he learned the techniques, and now all of his portfolios are actually on automation. Right? That really takes the emotions out of things. Right? It runs the system for him. Right? Now, in addition to those 2 bonus modules, you're going to get 60 days of access to the VectorVest software. All right? We're going to give you 60 days of access to this. We know that this software will help you implement the techniques that you learn in the course. All right, so I want to make sure you have it. If you don't already have it right now, if those of you who already have it, great. You continue with what you've got. But we want to give away for people who don't have it right now access to it. It's like a 60-day trial to the software. All right, we're going to show you how to become a successful investor, right? With the course. Now we're also going to use a tool to help you get better results faster. All right, so using a tool, it's a way to make it a lot better. All right, so at the end of the course, you can decide whether you want to keep the tool or not. It's totally up to you, but I will say this. Whether you decide to continue with the tool or not, you're going to become a fantastically confident, successful investor from this course. All right, you'll also get 60 days of access to one of our top-end tools here at VectorVest called RoboTrader. Since I didn't even mention it today, there's not much more I'm going to talk about this, but just know this is one of our top-end tools. We'll give you access to that. It's actually will become more useful in the bonus module that you get. Here's a big one. You'll get 6 live mastery support sessions. So we're not just going to give you a course and say, best of luck, have fun. We're going to be there with you every single week for 6 weeks. All right, these are designed to help you actually implement the things you learn in the course. All right, these implementation sessions will help you be like Rick, from earlier, where Rick was implementing the things throughout the course, and he was able to see that 11% gain in the 6 weeks of the course, which was actually pretty cool for him. All right, so we're going to be there with you every single week for 6 weeks, guiding you through this course. You'll also have access to our group coaching, where you will see our portfolio. So this is where you're going to see what we're trading, why we selected the stocks, how we're managing them. We're going to show you. You can come to those sessions. You can ask questions. This is where we help our coaching clients manage and implement the system that they've learned. All right, so you get access to this as well. It's a huge bonus, by the way. All right, so as far as this goes, total value, you get the full course, you get the mastery sessions, you get the access to the software, you get the 2 bonus sessions, you get access to the RoboTrader software. So the obvious question right now is, all right, well, how much does this course cost? Right? Is it like $2,000 that I'm going to have to spend? Is it going to be $1,000? Is it $495? Well, the truth is we probably should charge one of those, right? It's that good, and the results that you can create for yourself are life-changing. All right, we've seen how this course has done that for so many people already. I mentioned just a handful of them in today's webinar. So we want you to be able to enroll today and start to get results right away. So we want to make this a no-brainer for you. So I'll say this course, is it worth those prices? Definitely. And honestly, throughout the year, no matter what month it is, you could purchase this course for $495, but not today, right? Today, we wanted to give you a couple of discounts, right? For the next few days, the course itself will be $295. But in just a moment, I'm going to give you a special price if you order while we're on today's webinar. All right, so you'll be getting the course, the live coaching sessions, the software, the bonus modules, right? All you have to do is go to VectorVest.com/TSIC. And we're going to put that link into the chat. But let me say this. If you order before the end of today's webinar, instead of the $295, you can get an additional $50 off and get it for $245. All right, so we're going to put that link into the chat box, www.vectorvest.com/TSIC. Right, www.vectorvest.com/TSIC. You can click the link that's in the chat box right now. It'll bring you to a page where you can take advantage of this. Right, this price, the $245, is even lower than our elite pricing that we sell this course for. So some of you on today's webinar are elite members of VectorVest. All right, so this is actually lower than your price. But it's only available while we're on today's webinar. I do have some people on today's webinar who have taken this course a couple of years ago and they just want a refresher. If you are in that boat, if you want to take a refresher, we actually sent you an email a day or two ago with a special link just for you where you can get it for $95. All right, I'll just put that out there. So if you've taken this specific course in the past, you can get a refresher. Just give our team a call or use that link in your email. All right. Everybody else, like this is $245. Think about, and remember, the risk is all ours. All right. And so if we take the course, if you for some reason think it is not worth it, or we have not fulfilled our promise to you, we will give you all your money back. All right, go to VectorVest.com/TSIC. Now, here are just some comments from some of the people who have taken the course. I asked them what they would tell you, right? And they said, all right, John said, it's going to help you make better trades. It'll reduce your losses, earn more profits in less time. Richard said, this course is great for beginners or people struggling as it gives you a clear front-to-back approach to fix many of the things you might be doing wrong and learn the right way, right, before you start trading. All right, Richie says, I've taken several other investment courses and this one is among the easiest to implement and stay on track. Lucine says, just do it. The benefits are unbelievable on so many levels, financially, emotionally, and psychologically. Danny says, take the course and follow what it tells you. You will not regret it if you're serious about being successful. And then Robert says, it's an excellent course to take and well worth the money that you spend and likely earn enough in your first trades to pay for the course. All right, just ask yourself, what was your gain over the last 12 months? What have you been averaging year over year? All right, and then ask, all right, is it where you want to be? Are you where you want to be? If not, do you have a plan to get there? If you don't have a plan and you continue to do the same old thing expecting different results, it's not going to happen. If you continue to do the same thing, you're going to get the same old results. So ask yourself, how much is it costing you not to do this? Then ask yourself, all right, well, what if I do this and it works? What if I start to get the same results that Kamel or Tim or Rick get? All right, what if it works? How would your life be different? And remember, the risk is all ours. You have a 100% money back guarantee. And if you order before the end of today's webinar, you get that additional $50 discount. The price is even lower than our elite pricing here, and you get it for only $245. But you have to order before we wrap up today. So in a little bit, I'm about to begin our Q&A. Before I do, in the chat box, if you know this is right for you, can you share with me and just say, I'm in? Just say, I'm in, and 2 words, I'm in the chat box. Ray says, I just bought it. And he says, thanks. Awesome. Welcome aboard, Ray. Zach says, I'm in. Pankaj says, I am in with an exclamation point. Zach also says, I just bought it. Logan says, I'm in. Susan says, I'm in. John says, I'm in. William is in. Moisey says, I'm in. Those of you who are saying, I'm in, I'd say either tonight or by tomorrow, you'll get an email from us with all the details, all the dates, all the times, the link to get into the course. All right. Those of you who are ordering to actually access, you can actually get the course right away. All right. Once we process your order, just go to university.vectorvest.com and you should see the course in there. All right. You have access to everything immediately. All right. So Kernia is in. Greg is in. Catherine says my husband is in. All right. So this price is US dollars. I see some. Wilfred is in Australia. This is US dollars. Steve is in. Welcome aboard, all of you. Now, before I get to the typed in questions in the chat, one of the most common questions we hear is, how much time would this take? I don't have a lot of time. And some people fear that, can I do this myself? Because they're so used to having other people do it for them. All right. Remember I mentioned Carol, who actually took over for her money manager? She feared the same thing. She said, you know what? I don't think I have a lot of time to manage my investments. I'm still working and I'm trying to juggle my father's estate. Right? She actually was paying a money manager to manage her funds, and she was getting very upset because the money manager only made 1% per year. And this was during 4 years of a bull market. But she was still fearful of doing things wrong and losing money. But she took the plunge. Right? She get in there, she did it, and she is so glad she did. She actually still comes to our weekly coaching sessions that we do on Thursdays. She said she's no longer afraid of the market. She knows exactly what to do. She's been having 60% winning trades. She's doing 8 times better than her money manager. She's got confidence and she's having fun. All right. So again, if you order before the end of today's webinar, go to vectorvest.com/TSIC. You get it for $245. We'd love to see you in there. All right. That reduced price is only good while we're on today's webinar. The price will go back up to $295 after today's webinar. And then actually all the bonuses, or most of the bonuses, will go away on, I believe it's Tuesday of next week. And then the price will go up to $495. All right. So welcome aboard, Janet, Steve, Kernia, Chris just typed in. Awesome. Those of you who are overseas, like I see Wilfred from Australia, you have access to VectorVest US and VectorVest Australia. James says, I just bought in. Welcome aboard. So what I'm going to do is I'm going to put a little flag on my chat box because I can't scroll back and find prior questions. All right. So if you have a question and you typed it in earlier, can you just go find it and copy it and paste it back into the chat box? Let me know what questions you've got. I'm here to answer your questions. My teammates in the background are working feverishly to answer your questions as well. So one of the questions I see is the time. Right, what the time, it says, Julio says, what time of the day are the sessions? All right, so first off, the course, it's a recorded course. You can go through the entire thing at your own pace. All right, you can go through the entire thing at your own pace. We will have live sessions. All right, so the live sessions, I think I've got a slide right here for that. Our first live session, we will get together on January 20th. So that gives you like 2 weeks to go through the recorded material, take the tests, do the homework assignments. So when we meet on January 20th, we will have a focus on Module 1. All right. Then on January 27th, we will have a focus on helping you implement Module 2. All right. So go through the recorded sessions and then come to the live sessions to get help with implementation. Now, just so you also know, we do have our weekly coaching with our coaching clients that we've got. We're inviting you to those as well, and that'll start the 21st. So you actually can come to 2 live sessions every week to get help to implement what you're learning. And the sessions start at 4:30 Eastern time, so whatever that works out to be in your time zone. All right, Lewis says, what's the time requirement per week? Well, I would say if you're going to go through it with us week by week, I would dedicate, minimum, 90 minutes per week. That's to go through the module and kind of do the homework. All right. Then if you want to actually do a little bit more, maybe come to the mastery session with us, I'd say between 90 minutes and 3 hours per week. If you're going to go through it week by week with us. But remember, you have access to this for an entire year. So you don't have to feel like you have to do it in the 6 weeks, but set aside some time to do these things. Put it on your calendar, and you make time for what you schedule. Right? If you schedule it, it'll get done. All right. Pankaj says, do I order via a link? Yes. This link that you see on the screen, let me get my laser pointer back out. There we go, vectorvest.com/TSIC. That is the link. We put the link into the chat box. When you go there, you should see the price for the $245. Just use that and you're in. And some people were asking, when do they get access? You get access immediately. Once we process the order, you can go to university.vectorvest.com and start to access the course. And remember, if you've already taken this course, some people have taken the course 2 years ago and they just want a refresher. Some people like talking to me and Todd on a weekly basis, and it's only $95. All right, we sent you a private link via email, or you can just call our office and say you want the refresher rate. Eric says, I just bought in. So Valerio, hopefully I answered your question on how many hours per week should I budget for this. Awesome Leo says, I've already gone ahead and purchased the course. Fantastic. Catherine, interesting question. Catherine says, where do we send others we know to buy into the course? Well, you can give them the same link. All right. Have people just go to vectorvest.com/TSIC. And by the way, that stands for the Successful Investor Course. All right, in case you need help remembering what those, this link. It's vectorvest.com/TSIC. All right. Mahesh says, I just bought. Welcome aboard, Mahesh. Great to have you. Phil says, how long do we have access to the course? You have access to the course for a full year. All right, so you have access for a full year. You take your time, go through it. You can call our support team throughout the year. So even though Todd and I will meet with you for 6 weeks, you'll still be able to call our office and ask questions if you want. Logan, is it in the evenings? Yep, the live sessions are at 4:30 Eastern time. Raj says, I'm in. Welcome aboard, Raj. Ted says, is there someplace I can go to find the elite pricing? Well, actually, if you go to that link that I gave you, the page will look something like this. Let me just pull it up here. Right, you'll see a page that looks like this. All right, it'll say $245. Remember, that's even lower than the elite pricing. All right, but let's say this price, you decide to procrastinate and you wait till tomorrow. When you hit purchase course now, there should be a button up at the top where it says log in for special pricing if you are an elite member. All right, so that's what you would do. So keep in mind, this $245 price will only be here until the webinar, until we end with the webinar. Later on tonight, it'll go back to $295. Right, for regular members. Elite pricing is always going to be $247.50, but it'll go back up to $495 on Tuesday. All right, so time is of the essence. All right. Ron says, good presentation. Says, thanks, I'm all signed up. Welcome aboard, Ron. Julio says, nice, I'm in. Welcome aboard, Julio. Ramki says, I already ordered and I am in. Welcome aboard, Ramki. Sarav says, I purchased the course. I'm looking forward to it. Fantastic. Welcome aboard. I feel like I'm a cruise director, even though cruise ships haven't been going out, have they? I feel like I'm a cruise ship director saying, hey, welcome aboard. Let's see. Yeah, you can call if you feel better about calling our office. Now, remember, sometimes after we do a webinar, the phones can be a little bit busy, but I'll put the phone number in the chat, 888-658-7638. That's a great thing about us here at VectorVest. We actually like it when people contact us either by phone or email or attend a webinar. We don't hide how to contact us. All right. Trying to go through all the questions. Give me time. Now, some of you are asking questions, and my team, they are responding to you in the chat. So please keep a look at the chat where you typed in your question, because a member of our team could have written back to you in the chat. All right, Lewis says, I'm in. Welcome aboard, Lewis. Catherine, the last one we're going to do would be tomorrow. Okay, so I don't know the link for you. If you go to maybe it's on our website, you can find it there, or you can call our office and they can get you a link. Alan says, "Can I start the course in 6 months?" Like I said, we offer the course is available for purchase. It's called a self-study version, where there's no live bonuses or anything. You can, but it's $495. It's still a great value for the course. So Alan, you could do that 6 months from now. You wouldn't have the live sessions with me and Todd, but you could, and you would pay $495 for the course. But yes, you could try it. All right, I'm looking for the next question that my teammates haven't answered yet. Let's see. Michael says, "Thanks, Brian. I already learned what I'm doing wrong in the first 2 modules." Awesome. So Michael's already started going through the course. Fantastic. George says, "I'm in." Penshow says, "I am in capital letters. Welcome aboard." Alan says, "Brian and the team, this was a really nice class with like 3 exclamation points." Thank you for sharing that, Alan. Alexandra, you say, "Can you please answer?" And I can't see what your question was. So if you want to retype, I'll search through it really quick. Let's see. Oh, Alexandra, with this course you get we call it intraday VectorVest. It's on a 15-minute delay. All right, so if you do not have VectorVest right now, we will give you access to VectorVest on it's a 15-minute delay. Because in reality, we're trying to teach you a system where you don't have to be glued to your computer throughout the day. So we're going to give you access. Everything will be streaming. It'll look like it's real time because everything will be ticking. It'll look like real time, but it's a 15-minute delay. Alexandra, if you wanted the real time, you just have to call our office. And they'd have to work it out with getting that, doing that for you. Cornea says, "I purchased the course." Fantastic, Cornea. See you at the live class. Catherine says, "Is it for the U.S. market or can we pick the market?" Actually, we made a change recently where you actually get access to all the markets that we cover. UK, Australia, Canada, whatever. Gail, you're mentioning that you're having trouble placing the order. It's hard for me to troubleshoot it while we are on a webinar. I don't have access to anything other than what you just typed in. So I'm going to ask, I've got a gentleman in the background, John. John, would you be able to reach out to Gail and help Gail sort out whatever is going on? So Gail, we want to help you out. We obviously would love to have you in the course. And John, can you just shoot me a note or something, however you would normally shoot me a note, and let me know that you will help Gail out, and reach out to Gail in the chat and say that you will help her out. Santilal says, "I'm an aggressive day trader and speculative long-term investor as well." All right, so we're not going to get into day trading in this course at all. All right. Joe says, "I'm signing up right now." Mitch says, "It's a great course." Alan, yeah, if you sign up now and get the discounted rate, yes, you could start doing it 6 months from now. Just know that the 6 live sessions start January 20th. So you can get the discounted rate. Now we might, run this course, offer this course later on in the year as well. I just don't know the dates and times of that. We only typically do it maybe 2 or 3 times a year. So I just don't know the dates. Curtis, it looks like Todd answered you in the chat. Solomon, what's the refund guarantee period for the course? Well, the idea is right at when the course is over, if you should know, like you could even let us know during the course. You know, I doubt you will be 2 modules in and you feel like you haven't gotten value in the course. Solomon, if you go through the course and you feel we have not taught you how to be successful, ask for the refund then. You're not going to take the course and then 12 months from now decide it wasn't a good course. You know, that sounds a little silly, right? You know, because the refund policy isn't based on whether you made money or not. You know, we have no control over the stocks that you buy. All right, you will know whether it was a good course. I can guarantee it's a good course. You know, we've been teaching it for several years, and you know, we've got so many testimonials and case studies about this. We coach people on it every single week. You will not be disappointed. And the other thing I'd like to say, Solomon, is I've done this too. And not with investing, but when you purchase a course, if you purchase the course with the idea of, you know, this is not going to work, and I want to do everything I can to get my money back, you're never going to give it your full effort. So you've got to decide: are you going to give this your full effort and really attack it and say, you know, I'm going to make this work? That's something you have to answer for yourself, I guess. Felix, VectorVest is not a broker, so you still need a brokerage platform. All right. You're welcome, Alan. Sheng says, how much money do you need to start to invest in the stock market? Well, with no commissions now, it's a little bit easier. You know, whatever the broker minimum is, you know, I don't know what the broker's minimums are now. I'd recommend that you have you know, let's say 5,000 is a nice amount. It'll allow you to, you know, diversify a little bit into different stocks. But I mean, you could do it with less. Obviously, if you're going to spend $245 on a course, if you only have $1,000 to invest, you know, it's starting to not make much sense. All right. Joe says, I'm in. Yeah, you don't have to make, you say you hope you don't make stock purchases based on impulse. All right. Now we're going to give you rules. Mike, VectorVest software, if you want to keep it, it ranges. You know, the base end of day version is something like $59. I think it's $69 a month. Rohan, you get 60 days of access to VectorVest if you don't have access to it right now. Daj, to access, once you've purchased the course, if you just go to university.vectorvest.com, you'll be able to, that's our university, university.vectorvest.com, no W's. We'll send you an email by tomorrow with all the details. Welcome, Pankaj. Great to have you in the course. Marek says, I'm in. Gail, it might be better. John, is there any way that somebody can call Gail over in Australia? Just send me a message on Teams to let me know that you... Cool. John says he's tracking somebody down in our support department who can call you. We were going to have them drive over, but there's not a bridge long enough. But all right. Nguyen says, I currently subscribe monthly to VectorVest. Brian said that by signing up for the class, which I just did, the course comes with VectorVest 15-minute delayed version. Is that correct? If so, yeah, if you have VectorVest now, let me clarify this. If you have VectorVest now, then you don't get like 60 days free of VectorVest. So like we're not going to extend your account 60 days, right? If you think about it, when you first started with VectorVest, at one point in the past, when you first started, you probably started with a trial. Some people start with like a 99-cent trial if we're having like some promotion, but most of the time it's like a $9.95 trial for several weeks. Well, instead of asking somebody to buy this course and then asking them to buy a trial, we just group the trial in with the course for people who don't have VectorVest. All right, so that's like their trial. It's almost like a $245 course with a trial. All right, so if you already have VectorVest, you already had your trial at one point, and we thank you for that. We're glad you became a member. If you already have a subscription, you're not going to cancel your subscription and then sign up for the course, and then you get 2 months free of VectorVest. That's not how it works. Let's be fair. Kernia, you can duck out now if you're all set. Awesome, Rohan. Great to have you. Steve says, I'm excited about the course. Fantastic, Steve. Dilip, the 245 is valid for a little bit. I think I set the timer probably 8 o'clock tonight, because that's typically when we might have ended. But we finished a little earlier tonight. Welcome, Rose. Rose is in. Great to have you. Felix says, I'm in, but I'm trying to get signed in. What is the cost of the VectorVest monthly subscription, says Wilfred? It varies. I would say take the course, and at the end of the course, we'll give you some options on continuing with VectorVest if that's what you want to do. I think it's best to just kind of go through the course and see what it's all about. Yeah, Bhavesh, you're saying, can somebody call me now? I'm on hold. Well, if you're on hold, it means that everybody who could call you is on the phone. So just be patient. Sometimes when we run a webinar like this, the phones get a little bit busier. All right, so just hang tight. They're doing their best. So if everybody's on the phone, there wouldn't be anybody who could call you right now. So with Gail, we're trying to track somebody down who can contact Gail and it was a very specific thing that needed somebody to address. Having trouble ordering the course, Bhavesh, or you're having trouble just logging into the course? All right, if you're having trouble ordering the course, it probably will say, like when you're on hold, does it say what position you're in on hold? Because if you're like in position, you're in, Bhavesh, you're in second position. That means there's only one person ahead of you in line on hold. I plead with you, Bhavesh. Be patient. Can you do that for me? Can you wait the one more person? Oh, thank you, Bhavesh. How about this, Bhavesh? I will wait. I will wait on hold with you here, because Logan and I'm not sure if I'm saying your name right. Logan, I've been calling you, says I'm third. So guess what, Bhavesh? If you hang up, Logan becomes second. I'm just playing around. Don't hang up, Bhavesh. All right, so while I'm waiting here, if you guys want to duck out, there's no more. If you guys have other questions, you can, of course, ask questions. Raj says, what's the phone number? The phone number is in the chat. It's 888-658-7638. Gail, John needs your phone number in Australia. So Raj, our phone number is 888-658-7638. Those of you who are still thinking about it, if you're on the fence, ask me a question now. Jordan, you just typed in a question that says, when will that provided? I have no idea what that means. Oh, cool. Raj, great. You heard me. Fantastic. Thank you, Gail, for that number. I promised Bhavesh and Logan I'd wait on hold here for them. All right. So when I do this, if you do have a question, let me know. Rohan says, I just signed up. I didn't get a confirmation. Oh, just so you know, I found out earlier today that there was a problem with that we have a third-party company that sends out the confirmation emails, that company, their system was down. And our team was working with them. And there's nothing we could do internally. It's something on their server. So that's why I said either tonight or by tomorrow you will get an email. And that's why I was trying to give you the website to go to if you ordered. That way you could at least log in and access the course, even if you don't get that email. So if you just signed up, Rohan, go to university.vectorvest.com. Cool. Bhavesh says, I'm on the phone right now with somebody. Awesome. Logan, I think if you're on a trial right now to VectorVest, I think what our system does, is it like restarts your trial. So let's say you're 1 week into your trial. It'll basically restart your trial and give you 60 days from today. If you're 2 weeks into your trial, it'll restart the trial then. I'm almost positive that's it. Okay, so you're just 1 day since it started. So it basically will start your 60 days once this order gets processed. Felix, we don't have a way to pay with 2 separate credit cards. No. Only fancy places like Burger King and McDonald's can do that. I'm just kidding. I don't even know if they can do it. Maybe like a Applebee's. All right, Rohan, you want to know how you could tell if you have access? Let me try and do this. So you would go to university. Let me see if I'm signed in. So once you sign in to university.vectorvest.com, you see I'm signed in, Brian. Now I have access to every single course that VectorVest has ever made over the years and years and years. But if you scroll, actually mine is I completed the course, so mine is in the completed section. But you would see your course in the My Courses area. So you might need to click on a link at the top that says My Dashboard. All right, so you click on My Dashboard, and then you'll be into a section where it says My Courses. And then when you find the course, you'll start the course, and you'll have access to all the course material over here. Okay? And you notice there's the presentation, the mastery session recording, the homework assignment, the test. All right, so it's all in there. Okay? Steve, all the trials should not require you to call back and cancel. No, they would just automatically end. Rohan says, I do not see it on my dashboard. That's something I can't help. Like, I don't know the answer because I don't have access to your account. You might want to, on something like that, if the phones are busy right now, Rohan, maybe just give a call either later on tonight or tomorrow. Just kind of just jot down the number and just give a call. Because that's something I can't troubleshoot. I'm not sure if my teammates in the background can troubleshoot that. But usually right after it gets processed, it might take, it's usually instantaneous, but then you'd be able to access the course. All right. Well, I still see a bunch of people on today's webinar. Either you fell asleep or you're thinking about something. You need help with something. If so, let me know or we're going to start to wrap things up here. Give you 10 seconds. 9, 8, 6, 5, 3. Hey, what about 4? Remember Space? Do you ever watch Spaceballs? Spaceballs, the movie. And they were counting down. Sarav says, I'm looking at the VectorVest screen and I have a question. I will try to see if I can help you. Do you have market data on all stocks or selected stocks? Well, we have a data on a bunch of stocks. Oh, I'm not logged into my account anymore, but it's a lot. Let me see if I can log in really quick. It's thousands and thousands. And usually, if you have a stock that we are not tracking, we have a person you could email and we will try and get the data for it. I'm logging into my account now. Now I'm logging into our US market. Yeah, thank you, Todd. Todd just wrote to you, Sarav, that we have 8,300 in the US. So here's VectorVest right now. You can see this is what we have, 8432. Now, of course, a lot of them are stocks. There's a handful of ETFs. Okay. And Ted, I'm not sure if you're saying that to me about adding a stock to the database or to somebody else in the chat, but if you want to email somebody about adding stocks to our database, it would be this. So if you're adding a stock, let me just make the text size bigger so you can see it. You see this screen? So new stock requests, Angie H at VectorVest.com. Right, so if you happen, and give us as much of the details as you can, like the ticker symbol, the company name, the maybe the exchange that it's traded on. You know, if it's in a different country, of course, let us know that too. That way our data department could find it easier. And if we can get the data, then we can start to track it. Okay? All right. Sarav says, do we cherry pick the stocks? No, 83. It is a big list. I mean, if somebody wants to track a stock, then we'll try to add it, and we'll try to get the stocks in there. Yeah, so this is what VectorVest looks like. It might look like there's a lot going on, but it's pretty simple. In our nightly videos, we say it's like the front page of a newspaper. You look for, green is good. VectorVest advocates buying safe stocks. Pretty simple to find some stocks. You come over here. We've got a great list of stocks. Help you find some things. To show you how easy it is to find some stocks with this tool, you can just graph these things. If I put on the earnings, I mean, look how simple it is to find. You just flip through. You got some really, here's end phase. We were looking bottom left to upper right. I mean, look at how many stocks in this top list are bottom left to upper right, smooth and steady with rising earnings. All right. So now it's all about finding them, knowing when to buy them at the right time, and how to manage them. So having a tool that can help you find stocks in like 3 seconds really helps out. All right. So with that, everybody have a great evening. I hope to see you in class, and